speak to you again very soon. Thanks for giving us your views. But one sector that has come back in a big way in the last many months is capital goods and infrastructure. So we have the management of IRB Infra. The stock, in fact, if you just map the last 1 year chart, is up over 40%. The company has seen a steady rise in toll collections in the month of November. Tushar Kavedia, who's the Chief Finance Officer at IRB Infrastructure Developers, joins us now to talk about that. Tushar, thanks a lot for joining us. You know, the last time we spoke to you, you said that by the end of FY23, you expect to see a 20% growth in toll revenues. Are you on track to achieve it? Do you think you can do better than that? And how are the toll collections up until now in December?
Yeah, sure. So, yeah, you are right. We spoke about some 20% growth in the toll collection for this year, and we are on track. We have been witnessing a robust growth month on month for toll collection across all of our projects. And presently, also, what you see for the month of November 22, we have seen a 39% of revenue growth across, considering on a portfolio which includes the IRB and the private InvIT portfolio. So this momentum is continuing for us, and we are quite confident to achieve at least 20% higher toll collections compared to last year.
All right. Hi, Tushar. Good morning. You know, Tushar, Nomura has put out a note and they're expecting some slowdown on the road capex from here on. They're saying that the government's hands are tied a little bit. They have limited scope to go and push that ahead. And ahead of elections, they believe there's going to be a slowdown. In addition to that, NHAI, well, they are saddled with debt. Put all this together, some part of the street believes maybe IRB is in a good position because you'll have a better balance sheet, you'll have some money that's coming in from GIC as well. My question to you is, what's the way out from here on? If government spending is going to slow down, how do you see things shape up? Will they go back to the erstwhile BOT model, which wasn't very good for banking names in particular? Or do you expect them to pick up the pace on the TOT monetization?
Yeah. Sure. So, yeah, we do have come across one report published by CNBC yesterday about a reduction in the capex from the government side on the projects.
Tushar, Tushar, just to correct you on that, the report was from Nomura. CNBC was only expressing what Nomura was saying. Go ahead. You were making a point.
So we have come across with that report, and we tend to agree with that report, considering that the capex may reduce for the projects which are under the HAM and EPC, because that has led to higher debt for NHAI. So we also agree to that part, and definitely it may lead to a push from NHAI to the private participation project model, wherein they will need to come out with the projects under BOT or variants to BOT, where more private participation would be there. And we always discussed about that, company has always been focused on the integrated model where BOT always remain our focus. And with this shift, what we are thinking, because of the pressure for them, will help us a lot, and it comes as a benefit to us in a large way, because we have been working on the BOT segment, and today also our portfolio have a large BOT assets across country. Secondly, I also want to bring to your notice that recently there was a success of a BOT project announced by the UP state, that is the Ganga Expressway, and with that success, we are presuming that the other progressive states will also come on similar model of BOT, wherein the private participation would be more. And as such, IRB always be beneficial, because of the company's focus always remained on the private PPP model throughout its last 3 decades.
Okay, so Tushar, what you're trying to tell us is you all are well placed. If you go back to the BOT model, private participation will come back. However, my sense is that the bankers will be a little skeptical to lend to some of those private developers, which puts you all in a beneficial, position. Is that the way that we should be reading that?
Yeah. So as we see that now, we have already a financial partner with us, like GIC, a big name for us, and they have been partnering with us in the BOT segment. We are having a better position for the upcoming BOT projects, or where we see more private participation in the models upcoming from the either from NHAI or the state authorities.
Right. Tushar, just to take the point forward, could you break up the assets that you operate under different models?
Yeah, we operate under BOT, TOT, and HAM. In fact, we have around we used to have 4 assets in under HAM, which out of which one is already being transferred to the public InvIT recently.
Yeah.
And we also operate on the TOT model, that is the Mumbai Pune Expressway, which is a part of IRB directly.
Right.
And we operate BOT assets, which are part of the private InvIT portfolio, where we own 51%. And at present we have almost 10 projects under private InvIT, where 9 are already operational and 1 is under construction.
Which one is this? This is the last one?
The last one is the Palsit Dhanpuri, which is also operational today, but it's a 4 to 6 lane project where construction is ongoing.
Okay. Got that. That gives us a good sense. Now, this Ganga Expressway, when will revenue start? That you alluded to that?
Yeah, so Ganga Expressway is a greenfield project which will take the construction time almost 2.5 years to 3 years for us. And once the construction is complete, we will start collecting toll on that project as well.
Okay, 2.5 to 3 years. So can you tell us what are the new order wins that you have? What's the order visibility like over the next 1 year? What's the target for FY23, both in terms of hybrid annuity and toll projects that you're looking at?
Yeah, so what we have seen we always seen historically the orders from the authority side come mostly in the 3rd and the 4th quarter, and we look for this opportunity. There will be ample opportunity under HAM, and in fact we are quite confident of having BOT also during these awards. We expect couple of projects to be in our kitty in next couple of months of size, say somewhere around 5,000 to 6,000 crores. And particularly if you see, our order book is also gives us a clear visibility for next 2 years, and we are quite comfortable in achieving our revenue targets for the next few years.
Okay. Just want to ask you also about the debt on the books, whether you think it could go up in the near future. You know, if there is lower tendering from the NHAI, if there is lesser fiscal space, perhaps lesser orders coming through to you, do you think that you may have to deal with higher debt? I think the last number that we have is a little over 13,500 crores. Do you see it escalating in the near future?
So we have been discussing this. These debt are mostly project-based debt, and all the projects are operational as of now. And we don't foresee any debt coming up for these projects. And in fact, what we work on the model is the construction plus BOT. So we looking to the margins what we generate from the construction segment. We don't foresee any further equity requirement or a requirement for a debt at the parent level. So our debt will further reduce over period because these all operating assets will be having a debt repayment over next few years.
Okay, Tushar, if you could tell us what could be the debt target then if it's going to reduce. And earlier you said that you're confident of meeting your revenue growth targets. So what is that target for FY24?
Yeah, so on a debt, we are presently placed at say 0.8 to 1 on a net debt to equity basis. This will further improve for us, and over period we may see the debt coming out in a phased manner, at least 8 to 10% year on year from here and now. On the revenue front, what you're talking about the target for the next year, we believe that the GDP growth expected for this year is somewhere around 7%. Considering even the same for the next year, we believe that the collection should be at least in the range of 10 to 12% higher than what we achieved for the year FY23.
So on the toll side and on the EPC side, or its consolidated revenue growth will be 10 to 12%?
So this I'm talking about the toll collections, what we are envisaging for the next year.
10 to 12%. Okay. All right.
Just one more question on, you spoke about how the toll collections have gone up month on month. Can you tell us exactly what has the tariff hikes been in some of your large projects?
So tariff hikes, what we have received was in the month of April 22, which was around 10% for most of our projects.
All right. We'll leave it there. Thank you very much for joining us and running us through all of that. Appreciate you joining in with all of that perspective. IRB with the focus on the business and looking pretty decent. By the way, it's interesting. I don't know if you can pull up like a 10, 12-year chart on IRB. It's interesting. I mean, it's basically back at 2010 levels. You know, these are names which got into a lot of trouble because of the change in policies, focus from one model to another model of handing out projects. And of course, IRB is now back at all-time highs. At 2010 levels, where it got to briefly, I think, in 2018. Then there was a sharp correction into COVID, and we are back at those levels once again. So 310 on IRB, 74 lower on the Nifty though. So we are at the day's lowest point. I think we are almost there, and there's been a sharp correction from 920, 925 onwards. Although we're seeing some attempt at a bit of a pullback as well. Futures still at about a 70-odd point premium. We'll take a break. We're back. And we'll connect with Nikhil Chopra of JB Chemicals and Pharmaceuticals. The company is acquired. Razel from Glenmark, that's in the cardiac segment. We will also connect with MK Surana, former CMD at HPCL, and Harshvardhan Dole of IIFL, and talk about oil marketing companies. Crude oil prices have come off. Does that provide relief? And is there an investment case? Back with that.